Good morning, traders. Steve Gans here, and I want to walk through a process with you that I get asked about a lot. And that process is, how do I decide what to invest in? Now, here I'm talking investing longer term. I'm not talking short term options trading. Now, long term investing could be buying stocks or it could be buying LEAPS, long term options. So, either one of those I consider to be investing. I also first want to say up front, I am not a certified financial planner. I'm not making any recommendations here. I'm just showing what I personally go through, the process that I go through, and what some of my plans might be. So the first question that comes up is, where do ideas come from? Almost anything I see out there. I see a TV commercial for a company that looks interesting. I drive down the freeway and see a business that I may not know. I watch a YouTube video and somebody mentions a video, CNBC or whatever news channel, and some stock pops up. I add it to my what I call my shopping list. Now, this is just a simple spreadsheet where I just toss a whole bunch of stuff. And then on weekends or whatever, I might go through and I might do some research to determine whether or not it's worth an investment in the future. This time of year, this becomes even a little more pertinent because as we went through the year last year, I actually thinned a number of positions that had grown considerably. So I may have had a $30,000 position in something that grew to a $70,000 position or whatever the case might be. And I thinned that back out a little bit. I sold off some of those that had appreciated significantly. I didn't remove my position. I just cut that position back a little bit, which allows me now to have capital to roll into what may be the next big up and comer. And knowing that some of those that have grown considerably, hopefully will continue growing, but they also may start to plateau a little bit, in which case I want to find some new stuff. I'm going to go through the process here with about 4 stocks. This video is going to be a little longer than normal because I want to share the entire process here. I'm going to show a couple of the different software programs that I happen to use for going out and evaluating kind of fundamentals of a company. It's something that just helps me wrap my head around these quicker as to whether or not they require further investigation. So again, you're going to see those couple of things. I have no real affiliation to them. There may be better tools out there, different tools out there. Both of these are subscription tools. And again, it's all this information I'm going to share is information you can go out and probably find on any of the normal websites, your Yahoo Finance, Google Finance, FinViz, etc. I just feel like these programs maybe pull that information together in a way that I can see faster in a graphical way. Let me go ahead and start this process here. I'm going to start off with Palantir. Of course, Palantir has ripped up in recent years. I don't know what my expectations are there, but the first thing I like to do is I like to look at a stock chart. This is a one-day bar chart, and I can shrink this thing down so that I'm seeing a couple of years worth of data, and we can see that Palantir has really exploded in the past year and a half or so. This is the type of thing that I'm hunting for right now. I want to be hopefully involved in some of the early stages of the next Palantir. I was able to do this last year. I got in Avgo, Broadcom is the company name, just to see what that looks like. We can see Avgo, and I was able to get into Avgo back in around Jesus, all the way back in around this area, around $45. And I bought LEAPS, long calls that have done really well, of course, in Avgo. Another one that I spotted early on, long before all the hype, was NVIDIA. Similar story, and I couldn't begin to foresee what was going to happen with NVIDIA. But I noticed some things happening all the way back here a year and a half ago. I bought some long calls, and of course, those have done extremely well over the past couple of years. So I'm looking for the next version of that. I don't suspect Palantir will be it because it's already had a pretty large run. Doesn't mean it can't go further here. So, but I figure it's a good place to start because it's something that people are familiar with. So as we can see, it's already had a pretty massive run. Now, the 2 tools that I use, one of them I've used for a long time, and this is called Fast Graphs. And I'll put the links in the description down below as well. But fast graphs allows me to quickly look at a company to help see what the fundamentals look like. And there's certain things that kind of pop out at a quick look. This orange line here is essentially what companies are historically valued at. And you're going to see that as a theme going forward here. This black line is the current price of the stock. If it were to pay a dividend, the dividend is also plotted here. So that's just a general, very fast overview as to what I'm looking at. But I can come in and I can see, how does the price of this company compare to their basic earnings? And I'm looking, in this case, 5 years back, which is as far as we go back on Palantir. And then I can compare it to diluted earnings. So if a company puts out additional stock, that's going to dilute my earnings. It looks the same, so they're not really putting out additional shares. I can look at it in relationship to the company's cash flow, their operating cash flow. So this company has a favorable operating cash flow, growing operating cash flow. But again, as it relates to me, everything I'm seeing here shows extremely overvalued. I can look at it in relationship to the earnings of the company. So this is EBITDA. So that is a little better look. Ideally, if I'm going to invest in something, I want the value to be under this tent in some ways so that it helps me understand that there could be a little more upward mobility or appreciation in that stock. And then the last thing I want to look at is sales. I want to make sure that sales are in fact rising on anything I'm going to look at to buy. So in my first very superficial blush here, I'm looking at this. My immediate thought is this thing's way overvalued. While it's probably a super great stock, it's probably not something I want to maybe get involved with up here. So now I'm going to go to the second piece of software. This is a new piece of software to me. I just started using it. It's called forecaster.biz. The thing I like about this is it is incorporating some AI analysis that you'll see here in a moment. So the first thing I do is I come and I look at the overview, and I can see here the blue line in this case shows me the price of the stock. The green shows me net income. So this thing has growing net income, positive net income. I can quickly look at the sales here. It's got consistently growing sales. All of those are great things that I'm looking for. I can come down here and I can look at the general performance, the year-over-year performance or growth in the stock. I can look at all the major transactions, what we call insider trading that's taken place. And right now, it seems like most of these people, the insiders of the company, are selling. That's not necessarily a bad thing. Owners of companies can sell for a lot of reasons. They want to diversify. They want to buy a new house. They could be going through some divorce, something like that. So there's a gazillion reasons that someone might sell. It doesn't necessarily have to do with an opinion that the value of the company is going to go down. It could just be they want to diversify. However, there's very few reasons to buy. So if I'm looking at one of these and I see a bunch of people buying, that is a strong story for me. I don't necessarily see that here. So not a bad thing, just it's not a good thing. This particular button tends to show how the stock historically trades over the year. And here I'm looking at it the last 3 years. No real discernible, what I would call trends here. So I don't really look too much at that in this case. I like to see if the stock is overbought or oversold. And this particular software uses a few different metrics. First of all, they have a Wyckoff chart. And any of this you want to know more about, you can hover over the little eye here, and it will give you a summary of it. But what the Wyckoff chart is largely doing is it's measuring whether there is buying pressure versus selling pressure. So in other words, are there more buyers than sellers? Now that's always been an odd concept to me because for every buyer, there has to be a seller. For every seller, there's going to be a buyer. But the way that this can somehow be quantified is that if people are paying up to the ask when they're buying, in other words, if somebody's wanting to buy a stock at $100, somebody's wanting to sell at $105, if more people are getting closer to or paying that $105, that is active buyers involved. If more and more people are selling down to that $100, they're wanting 105, but if they're not getting it, they're going down to 101 or $100. That tells me there's more active sellers. People are willing to take those bids as opposed to more people willing to pay up to the ask. So that's how you can sometimes help determine whether there's more buyers or sellers in the mix. And in this case, they've also used a method of coding the price. This red shows that it is possibly overbought at those times. Yellow is mildly overbought. Right now, there's nothing real compelling here that tells me that I should be buying or selling. It appears to be a little more oversold. I can also come in and look at fundamental measurements. A couple things I can look at here is I can see what the numbers are doing over here, what sales are doing. I can see sales are growing rapidly. Really like to see that. I can see net income while it's run at a loss for 5 years. This last year, it did move profitable. That's probably what spiked this huge, big up move in it. All that said, it's measuring fair value. It uses 3 different measurements for fair value here. It can only actually compute on one of these because there's not enough historical data for the other ones. Some of the other stocks I'm going to look at, we will see that it gives measurements on all 3 of these. Right now, it's only using the Peter Lynch method. It's not using discounted cash flow. It's not using economic value added, which are 2 other formulas that are often used for determining where a company should be valued. And on the one measurement we have here, it's showing that the fair value of this stock should be around, now it's trading up here at $79. So it is, according to this particular measurement, it is 95% overvalued. That's hugely overvalued. Now, that does not mean that you don't invest from time to time in an overvalued company. But right now, everything is telling me, no, don't go there right now, but flag it for a pullback in the market. Now, am I going to wait for it to pull back to 3? No, I'm not. But I certainly don't want to pay $80 for this right now. A couple final measurements here that help determine how sound the company is. There's the Altman Z-score, the Petrovsky F-score. Now, this is something, again, we can hover over this, and it will tell me more about it, but it's something that tells me how strong the stock is. And this Benich score is a measurement of how likely or unlikely it is that the financials might be being manipulated a little bit. And again, you can find out more about how that's done by hovering over this eye, and you get a full explanation of this measurement that's being used here. And then we can come down, we can look at the number of shares outstanding. So they keep issuing more and more shares. Many companies buy back shares, so the number of shares outstanding becomes fewer and fewer, which is great for those of us holding shares. But in this case, they're adding share count, at least recently they have been. And then this kind of shows the overall rough idea of the financials, shows whether the shares are increasing or decreasing, as I just mentioned. Increasing shares meaning essentially that I'm getting watered down. I own shares right now, but the company all of a sudden introduces another 1,000,000 shares at the same price that I'm at. That's going to dilute the ownership in the company, and my shares will lose value in that event. That's something that the companies will often do when they're in this heated state right now. They can issue more shares, bring in lots of additional cash into the company, but it dilutes those of us that are out there. We can also finally see, where does their revenue in the company come from? And if I want to go in and look specifically at other measurements here, I can come in and I can look at ratios. I can see a number of different return on equity ratios, profit margin, debt to equity. If I want to look at the raw data, the actual reports that are filed with the SEC, I can come in here, look at income statement, balance sheet, cash flow, etc. I don't get into that until I start digging much deeper at this superficial level. I'm looking at this information, and right now I know this is not something I'm interested in right here, right now. But just to show you what this forecaster agent, this is the AI piece of this particular software. I click the What's Happening button. It gives me all the very latest news on the company, what they're doing, what are their pros and cons, so to speak. Why is the price moving the way it is? Who are their competitors in the industry? Who are they out there competing against? What suppliers and clients do they have? What future prospects or growth areas do they have? And then ultimately it gives a buy or sell rating. In this case, if you're a short-term buyer, it gives it a rating of a 6, gives it a 7 if you're looking at medium length, and it gives it an 8 out of 10 at longer term. Those are good ratings, but again, I think it's a little overvalued for my taste. Political, it comes in and shows you what Congress people are buying or selling, so you can get a view of what's happening there. Many times people hold opinions that our government officials may have insider information. I'm not saying they do or don't, but if they're passing the rules on what might impact companies, a case could be made that they may know that certain things are going to happen before they happen. Whether or not they're acting on that, who knows? But this will at least give you some insight into what some of those people are doing. So that gives you, again, a very high overview of this particular piece of software and how those two pieces of software play together to help inform my decision. Looking at Palantir right here, I'll knock in the date that I reviewed this, just so that I've got a little log on it. And sometimes if I have a source, I got a newsletter or something and it mentioned a source, I will put that in there. In this case, I used, again, fast graphs. And with fast graphs analysis, I pretty much determined that it's a no-go, it's overvalued. Then using Forecaster, I've also determined no, based on how I'm reading this there, not interested. So I'm going to put in here way overvalued right now and set an alert to buy. And I don't know, I'm going to put $50 in there, but at $50, I'd want to at least take a look at it. So right now, this is not going to have a plan. I'm just in a holding pattern on this. Look at the next one. Let's look at Mara. So we'll come back here. I'll take a look at a chart on Mara. And so Mara's been chopping sideways quite a bit. I don't know, first look at the chart. I mean, I like the fact that it is at a low, which means that there may be a little bit of what I'll call a moat of safety in here. In other words, if this thing were to drop from 19 below probably this 1450 or 15 range, I'd know I was wrong. So something I always like to at least have kind of an idea of. And then we'll put Mara in here. And then I'll also come to fast graphs. And I've just used fast graphs a little bit longer, so I'm going to start there. Okay, so the first thing I'm looking at here, their operating earnings. They've been very choppy. They've had good earnings some years. They've had no earnings for a number of years. They are all over the board here. Don't like that right out of the gate. That does not look appealing to me. And then we can look at the basic earnings. It doesn't look any better. Look at diluted earnings. No better. I'm just curious. Let's look at operating cash flow. No better. I don't know where I came up with this idea, but I'm certainly not liking it. I'll look at EBITDA. Little bit better. Look at sales. And they appear to have a semi-steady sales stream. But looking at a very superficial look at this, on fast graphs, not really liking this. Let's just see what we see here. I should also say that I'm not real sure even what Mara does. So I can hit this little pull down menu here and it will give me a rundown of who they are and what they've done. So it looks like they're largely a digital asset company that mines cryptocurrency. Okay. I personally am not a crypto guy. So that also is a flag for me that's, probably not something I'm interested in. Their sales have been growing pretty considerably. Their performance is very spotty. None of the insiders in the company are buying. So all of that is negative stuff for me. Look at overbought, oversold. The Wyckoff is down, but it is bouncing a little bit. It is back in an area that if I was a crypto person, maybe I'd consider potentially looking at it here. Take a quick look at fundamentals. And the fair value on this, again, only one measurement, is 794. It's currently trading at 19 and change, so it's considered overvalued by this measurement. Yeah, there's nothing here that's compelling to me. Shares outstanding is growing considerably, so they continue to sell more shares. Don't like that either. This is just a quick moving on. That's a no. And I keep these in my spreadsheet so that I can go back when something pops up again at some point in the future. I can take a quick look and just say, yeah, I already looked at that and it was a hard no. I liked nothing about this. Okay. Let's look, I'll circle back to PayPal. I'm going to look at this MMS. Now, this is one I actually recently went through this process on, and I determined that I did like it. So let's take a look here. I actually will be going out and doing some buys on this soon. It has sold off recently, but it pulled back into what I consider to be somewhat of a support zone. So obviously I want to understand why it pulled back and what that really means for the future of this. But at least that's a quick look at where that is. And then we'll go to fast graphs, take a look at fast graphs. Okay, this looks a little more appealing to me. We can see that the stock price has generally followed the earnings here. So you had a dip in stock price because they knew there was an earnings dip of some type coming up. Then it rallied back up, and then it came back down here. As earnings came back down, then it came back up. But the stock price is off right now, but the earnings are holding up here. So that, when you get down into this darker green area, many times for me, that's a point at which I want to say this appears to be undervalued, and therefore I'm more interested in it. This white line here shows, in this case, the dividend yield. So it paid a dividend for a very long time. Then it upped its dividend significantly here in 1919, and that dividend has remained steady. And I can see over here that dividend is 1.5%. So it's not a massive dividend, but that's a decent dividend. And then I can also look at the other areas here, basic earnings. So it looks good on basic earnings, diluted earnings. Am I getting diluted in any way? I'm not. I can look at it on a cash flow basis. Cash flow has been strong. It's been a little up and a little down, but overall in an upward trend. I like that. That's operating cash flow. Free cash flow also holding up well. Earnings before interest, taxes, etc. So that's looking good. And EBIT. So I can look at EBITDA. That looks good here. And then I can look at EBIT. And again, it may require a little study on your part to see what all these phrases are and help you understand what's important, what's not. But for me, all of those are somewhat important and they all look favorable. And then I, of course, want to see what's happening with sales. And I can see that sales continue to go up. They're showing this dashed line here is forecasts for 25, 26. Those are holding up well. Right now, everything I'm seeing on fast graphs is favorable to me. I want to look at the same now in Forecaster. Again, Forecaster being a newer product to me. I can see that the net income has gone up considerably. And while the net income has gone up, the stock had sold off. I'll look at this from a sales standpoint. Sales continues to be growing. It is plateauing a little bit here, but it appears to be growing fairly nicely. Again, seasonality isn't a huge factor to me, but we can see that the past few years at least, 3 years, 5 years, it has popped up in the February area. That doesn't mean a great deal to me when we're only talking a couple years. Overbought, oversold. So we can see here that the Wyckoff is definitely positive. So people are more buyers than sellers right at this point. This green was a buy area pretty much all the way along here based on them using this particular metric of Wyckoff and then this advanced DPO. Again, I can learn more about that coming in here and reading about that. But that helps me as well. I like that. I look at the fundamentals and I can see here very solid sales increase. I can see net income has been holding nicely here. Here we were 306 million, 3 million, 214 million. So nice consistent growth there in net income. I can see that fair value-wise, this based on the 3 different metrics used here, discounted cash flow, Peter Lynch, and economic value added. Again, the two prior ones we looked at, it could only do the Peter Lynch calculation because some of the numbers weren't good enough to even do these other calculations. So here it can do all three calculations. It shows me that the averaging these together, that it says the fair value should be around, let's see, fair value should be around $113. It's currently trading at 77. So it is almost 50% below its fair value. That's definitely a plus to me. I can look here at the Altman Z-score. It has a low risk of bankruptcy. Petrovsky S-score shows that this stock is a strong stock based on the calculations it uses to do that measurement. And then the Benich score shows that it's unlikely to be manipulating its earnings. All of those, of course, are very positive things. The other thing I really like here is look at this. It's buying back its own stock. So the number of shares outstanding is going down. That means that if I'm a holder of these shares and they continue buying back, my shares become more and more valuable. So that's a plus as well. I like to see that. I can look over here at the financials and see sales, net income, free cash flow. Again, all the same things that I would see in fast graphs. This is just a slightly different way of looking at it. All of those look very strong. I can see here where their sales come from. 33% come from outside the U.S., 66% within the U.S. So again, all of that is very good information that I like to see. The one thing I didn't look at here, let's see, was the insider buying and selling. The insiders, the CEO and president of the company is buying in December. The director is buying. Another director is buying. So there is lots of buying going on here. In some cases, here, 3,500 shares at $70 each. That's a massive amount of money. So the fact that I see this much buying going on while this stock is dipped down in price also tells me that the people inside the company have a firm belief of what they're doing and that they're putting their money where their mouth is. Also, again, I can come in and look, what does Maximus do? It's a business provider service. It does health and human services programs, provides services to the federal government. I can see who are their competitors, and then I might want to come in and do a compare and contrast against a couple of their competitors. Who are their suppliers and clients? What are their future prospects? Their buy and sell. So again, it's showing me right here that it's currently trading at $77.50. These are the three different valuations that these three different metrics would calculate the value to be at. Their profit margin's decent. They have very low debt. So when it comes down to actually ranking this as a buy, so if I'm looking to buy this in the short term, it's getting a 6, probably because it's sold off quite a bit recently and nobody's really sure is the sell-off over or not. In 6 to 12 months, it's got a 7 ranking. Longer term, which is what I'm looking at here, it's got a 9 ranking. So a pretty good overall ranking on that long term. If I want to go a little deeper here, this will give me even more information. Look at more financial metrics and analysis. Get me a little deeper into some of those, what some of those scores mean. Talk about their market diversification, etc. So I wanted you to see an example of what a favorable one looks like. And then let's go back. I've already entered my data on that. Yes, I liked the way it looked on Forecaster. I liked the way that it looked on Fast Graphs. There's another one I'm starting to look at here. I'm not going to get into that right now. So I liked all three of those, and I decided I'm interested in buying 500 shares at $73,000. That's going to take $38K. So I know somehow, somewhere, I need to make sure I've got that money sitting on the sidelines, and I happen to know I do at this point. Otherwise, I'd be looking at something to consider selling. Now let's just do PayPal. And again, I'm going to do just a quick blush through PayPal here. Come back to chart, and PayPal, obviously it used to be really high. It had fallen off considerably here for a couple years, and now it's starting to look like it might regain some of its former glory. This is one of those that looks like, at least from a technical standpoint, if it breaks out here above 100, I could see this thing starting to run again, at least from a technical standpoint. Just a quick look at this chart, but it's going to have some resistance here, and I need to know that in this 2 to 95 to 100 range. It's going to battle getting through that area, I would guess. Let's just see what these two have to say about it. PayPal-wise, I'd come in here. The net income is very strong above, laying these two over the top of each other. And the net income certainly looks like there's lots of potential room there. Sales is moving up, continues to move up considerably. So that looks quite good. There are some insiders buying, although this was last year, but it was at about a $76 price, where that's about where it's trading now, 81, 88. They were even buying it at 103, 109, even 124 and 125. The insiders have definitely been buyers on this along this way. And again, see right now it's at 85. So their points they bought it at were higher than this, which tells me that they have a fundamental belief that this is going to go significantly higher. Again, their fundamental belief doesn't mean it will, but you never know. Seasonal wise, so looking at 3 to 5 year history here, we can see that historically this has sold off for a couple months, the Q1. Again, this is based on just a few years worth of data, so I don't place a lot of credence in that, but it's good to look at and have a sense of. I look at, again, the overbought, oversold. We can see here we flashed green not too long ago. So that's when the Wyckoff was moving its way up here and we were dipping a little bit. We have what we call a divergence there where the price is moving down and the Wyckoff indicator was moving up. That's oftentimes a favorable time to consider buying something. And the Wyckoff is moving back up here now. So that's of some interest, a little bit of a plus here. Take a look at the fundamentals. Love the look of the increasing sales. Net income here did drop. It was 4.17, then it dropped down to 2.4. Now it's back up at 4.25. There was a little bit of unsteadiness there in net income. So as I do further research, I might want to see why was that? What prompted that? These are the different measurements of what the valuation should be. This is the average of those. So it shows that the current price is 87. It's got fair value all the way up here at 153. So it's 75% below what you might consider to be a fair value. Altman Z-score, this doesn't work in the financial sector because of the metrics that they use. The Petrovsky score does, and it's considered a strong stock. The Benish score is the company's unlikely to be manipulating earnings. So all of that is good. Shares outstanding is dropping nicely. So they're buying back shares, which means the shares that are left out there, basically the value of the company is being divided up among fewer shares. So my shares become worth more anytime a company is buying back their shares. So I certainly like to see that. We can see sales are increasing. Gross profit is a little bit plateaued here, the salmon colored ones, but not going down. So all of that is good. We can see revenue by products. Transaction revenue, of course, is their main income stream. All of that is favorable. I can look at political, who's buying this politically. There's this Josh Gottheimer seems to be buying quite a bit. Tommy Tuberville's selling. Don't know if that really means anything, but you have that view as well. And then I can come in and look at all these different aspects. Again, what's happening with PayPal. I'm going to go straight to where it ranks it from a buy or sell standpoint. This is the AI model going in and looking at this. And from an AI model standpoint, it's selling short-term 7 out of 10, mid-term 8 out of 10, 2 to 5 years, 9 out of 10. So PayPal is one that I'm going to go ahead and I'm going to flag for a little deeper dive. The things I want to learn in my deeper dive is why did it have those odd earnings here? Why did the earnings dip here? What happened? So that's going to be one of the bigger questions that I want to get answered. And again, I'll just take a deeper dive overall on PayPal, but let me come back here now to my spreadsheet. And this one, I like the looks of it in both of these platforms. I'm going to research further for buy. And generally speaking, when I step into one of these, I may phase in. So I'm going to say that I'd probably look at maybe starting with 15,000 or so investment in this, and then look to build that over time is my gut reaction right now. Doesn't mean that won't change. And I'm going to leave that in hold right now until I finish up deeper diving on this. And deeper diving on that isn't so much looking at metrics and things like that. It's more about how much of this type of product might I already own. I happen to know I already own some PayPal, so I'm going to take a look at the piece that I own. And how large is that? Am I okay adding more to that? Do I have other similar related products to this? And then I don't want too much in one basket. So again, I know I covered a lot here and I went through it pretty quickly. This was a longer video, but this is probably my number one asked question is how do I decide what I'm looking to invest in long term? The one final caveat that I want to put in here is when I go to buy this, am I going to buy stock or am I going to buy LEAPS, long-term options? So for that determination, I tend to lean a little bit more toward option strat. Option strat, I'll come in here and let's just say, of those two that I looked at, I don't believe that PayPal has dividends at this point. I do believe MMS did. So in MMS's case, I'd probably just buy the stock because I want the dividend. If I have a product that or a stock that does not have a dividend, in many cases, I may consider just buying a long call. So that's where I'll come in here and I will go out as far as I can go out. I'll go out to January of 2027 and I'll take a look at buying that long call. So buying that long call, what that does is it caps my maximum risk in that at whatever I pay for it. If I'm expecting it to get up, in this case, it's at 87 now. If I'm thinking this might get up to the 120, something like what Avgo has done or Broadcom has done, for me, it's somewhat of a no-brainer to spend the $2,000 per contract. Now, this $2,000 is going to represent 100 shares. It's a no-brainer for me to spend that amount of money as opposed to going out to get 100 shares of this. I'd have to spend 8,700. This amount does decay over time. So if I am wrong and the stock stays right where it is here, I will end up losing money when we get to that expiration in January of 2027. But what I'm looking for on these is I'm looking for some fairly quick movement in a favorable direction. In this case, because I'm spending that $2,100, this is going to have to get above my break even, which right here, my break even is about 110 on this stock. So it's going to have to get above $110 before this starts to become a profitable position. But it has to get above that 110 in the next 2 years before this January 2027. So that's what I'm shooting for on that. And again, if I buy the long LEAPS, the long call options here, and 3 months down the road, I don't see this moving in a favorable direction, not much decay will have happened in 3 months, so I can likely get out of this for a very relatively small loss. Because if I just go a couple months out on this, we can see that this might be down $200 or so if this stays right where it is. So if it does move in my favor, great. Now, the other side of this coin, if this thing takes some massive hit for some reason, let's just say that the price drops from $87 and drops in half down to 40 some dollars. My max loss in this is what I paid for those options, which is $2,100. If I own the stock and I had $8,700 worth of stock and the value of the stock cut in half, I could lose $4,700 or $4,500. I could lose half that value. This also protects my downside a little bit by buying the LEAPS. But again, I have to understand that this premium is decaying. That's going to be decaying against me over the next couple of years. But if I'm looking for something that's going to move up rapidly, I don't really care. So again, hopefully that gives you a good summary here. I know it was long. Thanks for sticking with me, and I'll do more of these in the future. Take care.